equivalent of the mosh pit. There were other venues for trading stocks of small companies, like the telephone-based over-the-counter OTC market, but these were insignificant and lightly regulated. Nasdaq was founded in 1971 to bring order and fairness to the OTC market. Footnote: the name was originally an acronym for National Association of Securities Dealers Automated Quotation System. It was a kind of virtual floor, a centralized system for showing prices. Dealers and traders across the country no longer had to read the daily pink sheets or pick up the phone to get prices. They could now see stock quotations in one place in real time. Instead of making constant calls to keep quotes current, Nasdaq dealers, known as market makers, only had to use a telephone when they wanted to actually execute a trade. Footnote: Nasdaq dealers acted as middlemen, matching buyers and sellers or filling orders from their own inventory. Given the low volumes typical in the over-the-counter Nasdaq stock market, the market makers were essential to provide grease to the wheels, so to speak, making markets in securities that otherwise would have been difficult to trade. As compensation, they generally took a small cut for their service out of the spread, or difference, between the bid, price a buyer is willing to pay, and the ask, price a seller is willing to take. In the excitement that accompanied the long boom of the 90s, Nasdaq found its stride. There had been a time when all America's stock markets played second fiddle to the New York Stock Exchange, NYSE. But in the final decade of the 20th century, Nasdaq had facilitated and nurtured the rise of a new generation of technology companies. Firms like Cisco, Microsoft, Dell, Apple, and Intel. Most of these started small, raising money with Nasdaq back when significant venture capital was hard to come by, and NYSE wouldn't list such unproven startups. Nasdaq was their only option, and so it became the public market parent to hundreds of promising children. Not all of them survived, of course, but the ones that did changed the world. And as they grew ever stronger, becoming national and global leaders, their loyalty to Nasdaq persisted. Indeed, as the center of American business began to shift west, away from the industrial factories of the East and Midwest to the sun-baked streets of Silicon Valley, Nasdaq was a primary beneficiary. Its brand became a global signifier of success, technology, and globalization. In the late 90s, when the boom became a bubble, Nasdaq continued to thrive. In those heady gold rush days of irrational exuberance, the promise of internet riches inspired thousands of startups to create online business models. All you needed were enough eyeballs, and it seemed that investors were smitten. A few such companies, like Amazon, were successful beyond all expectations and became pillars of the global economy. Many more are now remembered only for their sky-high valuations and disastrous flameouts, like eToys or Pets.com. Nasdaq was at the center of all of it, opening the door to a new world of global online trading, stock speculation, and wealth creation that would have been unimaginable a decade earlier. In fact, it would not be unreasonable to claim that there could not have been a dot-com boom at all without Nasdaq. In 1999 alone, the Nasdaq Composite, a weighted index of several thousand stocks listed on the exchange, increased almost 86%. But even as its brand reached new heights of prominence, Nasdaq was under threat from a new wave of innovators. I was one of them. As an entrepreneur in what is now known as the fintech, financial technology industry, I created one of the early electronic communications networks, ECNs, for ASC. ECNs were computer-based trading systems that not only posted quotes, but electronically matched and executed orders. On Nasdaq's system, you could see the bid and the offer right there on